Welcome back to the Deep Dive. We're here to unpack the big ideas shaping our world, breaking down complex sources so they make sense. Today, we're jumping into the evolving world of finance, specifically how traditional banks are, well, grappling with digital assets and all the new demands for modern payments. Our main source for this is a really interesting piece by Frank Mazza from Metal Blockchain. It's called Fees Miss the Point. It's time to move digital assets to the top of the roadmap. So, our mission today, to understand what recent moves by some huge financial players really mean for the industry, and maybe more importantly, what it all means for how you handle your money day to day.
Yeah, and the article kicks off with a pretty bold claim, doesn't it? It basically says that banks focusing just on, say, charging fees for data access, well, they might be missing the forest for the trees. They're maybe overlooking the bigger strategic win, which is really embracing the whole digital asset opportunity. It's about looking forward, not just defending turf.
Okay, let's dig into that with a concrete example this source mentions. Big news just last week, right? JPMorgan. They reportedly announced plans to start charging fintech companies for access to customer bank account data. And we're not talking small change. The fees could run into hundreds of millions of dollars.
Yeah, huge sums.
Especially hitting those payments-focused firms hard. So, what does this signal? And what could it mean for you listening?
Well, it really shines a spotlight on this fundamental challenge for the big traditional banks, doesn't it?
Yeah.
They're trying to juggle protecting customer data, which is critical, obviously, with the massive and growing demand for modern financial services. And those services often need that very data.
Right.
That's a tricky balancing act, and it's really forcing some big decisions across the whole financial sector.
And this is where things get interesting with the fintechs. You look at Robinhood, Coinbase, Venmo, they've grown incredibly fast. But the source argues it's not just because they got access to bank APIs, those digital connectors that let apps talk to banks. If it was only about APIs, the banks could have competed differently. So what is their edge? What's the secret sauce, according to Mazza?
Well, the article argues pretty strongly that it's not really about the tech access itself. It's more fundamental. It's about meeting a very clear, very present customer demand. People, whether they bank traditionally or use credit unions, they're actively looking for things like crypto, digital assets.
Faster payments.
Faster payments, yeah, and just easier, smoother ways to move money around.
Yeah.
Less friction. Fintechs just got there faster. They delivered what people were starting to ask for.
Okay, that makes a lot of sense. But let's talk about the fallout from these potential new fees from banks like JPMorgan. Our source suggests that, charging fees might plug some revenue gaps short term, but it doesn't solve that underlying demand issue. And those costs, they'll likely trickle down, right?
Almost certainly. They'll hit the fintechs first.
And then eventually,
probably you, the consumer, either through higher fees on the fintech apps or maybe reduced services. It has to go somewhere.
So fintechs aren't just going to sit there and take it, presumably.
No, and this leads to a really fascinating strategic move the article highlights. Many fintechs are basically saying, okay, if accessing your data is going to be costly or difficult, we'll just become the bank ourselves. They're pursuing their own bank charters.
Ah, right, like Coinbase.
Exactly. Coinbase already has a federal trust charter. It's a type of banking license. And Robinhood is reportedly pretty close to getting theirs too.
So what does that actually let them do?
It's a huge shift. Once they're inside the regulatory perimeter, as the article puts it, they don't need that external bank data anymore. They own the customer relationship directly. They can offer lending, maybe issue stable coins, connect directly to crypto networks, all without needing the old banks as intermediaries for that core stuff.
Wow. So the fintechs are becoming banks? What does that mean for the traditional players, the banks and credit unions we've used for years? And again, bringing it back home, what does it mean for you? How you bank, who you bank with. Seems like a big turning point.
It really is. And the article frames this not just as a threat to the old guard, but actually as a crucial opportunity, a chance for traditional institutions to sort of reassess their priorities. The message is digital assets, modern payments. This stuff shouldn't be item number 50 on a 5-year roadmap anymore.
Yeah, buried in a strategy deck somewhere.
Exactly. It needs to move up, way up the agenda. It's becoming table stakes to stay relevant, not just some futuristic nice to have.
And if they do that, the benefits for you, the customer, could be pretty significant, couldn't they? Imagine your current bank, the one you already trust, offering seamless crypto trading right there in the app. Or instant payments that settle in seconds, not days. Or even ways to interact with DeFi.
Right. All in one place.
It means less juggling different apps, maybe more security, all within that familiar banking relationship.
Precisely. And that's the core argument for the banks themselves. Offering crypto, instant settlement, on-chain movement. It's not just about chasing shiny new tech. It's actually a smart, proactive way to keep hold of customer deposits.
Keep customers happy.
Keep customers happy, strengthen those relationships. It's about meeting people where they are now with their financial needs. It's really an investment in their own future, ensuring they don't get left behind.
So boiling it all down, the message from Mazza and Metal blockchain seems pretty clear. The winners in the next decade of finance won't be the ones building higher walls with fees.
No.
They'll be the ones building bridges, empowering their customers with the tools they're actually asking for, connecting them to the future of finance.
Yeah, it's a powerful idea, and maybe something for you listening to think about as you look at your own bank or credit union. How are they responding to this shift? Are they leaning into the digital future, trying to build those bridges? Or are they maybe putting up more barriers? And how does their choice affect your financial options and possibilities going forward?
That really brings it home. This deep dive shows the debate isn't just about who pays fees for data. It's about a much deeper shift in strategy, about aligning priorities with what customers actually want and need in this digital age. Hopefully, this gives you a clearer lens to see which institutions are genuinely trying to build those bridges to the future for you.